Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is a special edition on the IPO rush. And the next IPO that's on our focus is clearly the IPO of Billionbrains Garage Ventures. That's the parent company of fintech platform Groww, which has opened for subscription today. And just within 4 hours of opening up, it's already got 35% subscription. In fact, the retail portion is fully subscribed on day one as well. This is a 6,632 odd crore rupees of an issue that's priced in the range of 95 to 100 rupees per share. And now let's dive into a conversation with the top management. Harsh Jain joins in. He's the whole-time director and COO of Billionbrains Garage Ventures. Welcome to you, Harsh. Good to have you with us. Congratulations on the IPO. Already kickstarting on a strong footing, especially on the retail front. It's fully subscribed. That tells us that the retail investors are truly interested in grabbing a pie of this IPO that's under offering. Help me understand first up, in your journey so far, why did you feel the need to, launch your company into the public space now? And also, if you could help us understand, because large part of this issue is an offer for sale. Was the idea mainly to give a partial exit to the existing investors, or is there more to it that the current investors can, or potential investors can hope to achieve from this IPO?
Sure. Thanks, Sakshi, for having me here. IPO. See, we are a fully regulated company, and one of the commandments we have internally is the transparency with the customers and everything. So we've been transparent in general the way we have been operating. So last 3 years we are continuously profitable for the last 3 years, and operating profit, EBITDA margin growing. Our market share also continue grow. So we felt that it's a good time where we can give a good historical context also in terms of financial numbers, and also there's a lot of growth which is ahead of us because our country is still not having the penetration that developed countries are having. In our own journey, there are a lot of products that we have not yet launched. So each of those products are going to come in the next few years. So there's a lot of growth potential which we felt is left while we are already regulated. So the level of there is an accountability that goes even further. There's a further trust that builds with an IPO, and it's a right way. If you're managing trillions of dollars of so many people, then it's the right thing. You have to be accountable, and we just felt it's a next level of accountability and transparency that we can offer to our investors and customers alike.
Right. Harsh, from the fresh portion, what is the purpose behind that, and could you help us understand what are you going to be using the funds for?
Sure. So, Sakshi, I'll answer your previous question also, which I missed. But one is the offer for sale. See, the IPO is 1,000 odd crores primary and 5,500 almost, approximate for the OFS. See, for an IPO, we need to have minimum 10%, right? That's how the IPO needs. Companies cash generating, so we're generating profits. We don't need too much of cash. We already have cash on our balance sheet. But we still have some primary because our businesses like margin trading funding is scaling really fast. We just launched it 9 months back. In the last financial year, we closed at a 600 crore book. Last quarter, we closed it at around 1,000. So it's a 60% quarter-on-quarter growth that we have seen in that. So there is a use of the money which will go there. There's also significant. We're a tech company, and we'll continue investing in building a stronger and stronger tech. It helps both in terms of building a right agility, and also our contribution margin keeps on increasing. And then obviously some part of it is going in the brand building, because consumer brand, you get a lot of value as a leader, and then there's a lot of word of mouth that happens across and builds the trust in the system. So there also, and then some part of it is also going to help us with the LAS and other products that we'll be launching in the wealth offering.
Right. Harsh, let's talk about financials. Your revenue growth has been pretty strong, 1,141 odd crore rupees in FY23. And then thereafter, by coming to FY25, we've already seen it at 3,900 odd crore rupees. So I want to understand on the kind of growth path that you can sustain, given SEBI's recent moves also impacting some trading volumes as well. Will this kind of a historic growth that you've charted will be sustainable or not?
Yeah, so see, our growth has been coming because of the nature of the platform. You know, when you build a platform for the first 4 years, we had zero revenue. Yeah. So, but then our product market fit was happening. A lot of customers were coming, and then they stuck. They retained over the platform for so long, and we kept on offering new and new products. So, as a platform, there's a lot of resilience that gets built in the business, and also a lot of value for the customers to stick around for. Say for example, someone starts their journey with say stocks. You know, over time they will want to do SIPs also. They will want to invest in ETFs. They will put some of their wealth in the bonds also. So they will diversify over time. So that becomes a powerful, and every product has its own monetization. So you will see in the most of the tech companies, you will see a slightly delayed monetization, but when they start getting revenues, the operating leverage is very strong. So if you'll see our last 3 years data which you're referring to, even from the revenue growth point of view, but even from an EBITDA margin point of view also, we've seen significant growth which will continue happening, because every time you launch a new business or a new product, you already have a lot of customers, plus your cost to offer another thing is not it's almost negligible, because you're completely tech and you are direct to customers as a platform. So going forward also, we see that there's a lot more potential. What we've seen the last few years from a customer growth point of view was a good start, I would say, because a lot of people have become aware, they've become knowledgeable about it, they got a feel, because around them also people started investing in participating capital market. But when we see from here on where India deserves to be there, there's still a good 5x to 10x growth available from the number of participants itself. Now, for each participant to be able to participate in different products of capital market and engage will also drive over time. So over time, the penetration, the adoption of different products, and then our revenue and our profitability will follow just by the nature of the platform business that we are running.
Right. Let's now talk about your segments. Broking is your largest vertical, which contributes overall 85 to 90% of your revenue. I wanted to understand, will that share come down meaningfully? And the other areas that you also briefly mentioned about, and you're planning to expand that as well. Could you give us a broad idea of how are you going to be looking at verticals? What sort of a revenue contribution do you aim to achieve for each?
Yeah, so see, broking used to be significantly more a year back, and then last year it was around 90%, 85%. Now it's already first quarter, it's around 80%. So as we launch more products and as the adoption happens, this will keep on diversifying further on. The new business side that we spoke about, the obviously MTF, we have already shared some numbers of the last year and last quarter, which is seeing a good growth. But still, if you look at our market share in MTF is very, very small, 1.5%, while our market share in everything else in terms of number of investors or ADTO, which is in daily turnover kind of thing, is significantly high. So there is a fair market share journey that we have to cover in that. Similarly, products like commodities, we've not even, it was not launched till the last quarter. So this quarter is when we launch. So we'll start seeing those numbers as we come up with our quarterly results, and we'll see how every new product will have its fair market, and this will keep on diversifying the existing revenue streams. The way we see it is that there is a customer base. When they come to the platform, they can start their journey from any product, but then they get more and more products. So each product will keep on adding a diversification to the line of revenue that company gets. So it makes it sort of resilient and diversified by nature of the growth.
Let's talk about your financial arm as well, NBFC arm, that's called Groww Credit Services as well. The concern some of the analysts here have raised is as far as the asset quality is concerned. There has been some search here. Do you see this as a risk that you would want to curb as soon as possible, and how is that going to be mitigated for you?
See, for us, NBFC business is a very small business, and it's still a small part, and it will continue to be a very small part of the overall business and overall revenue. Part of it will be unsecured personal loan, and part of it will become the LAS and LMF, which is a secured loan. So over time, this will be a healthy mix of the two, secured and unsecured book. But when you see, one of the businesses that we didn't talk about, where we are entering in a we are spending a lot of time, is the wealth business, and that is through an acquisition we got head started, but then we will be building, because a lot of our customers have become affluent. So almost 2.5 lakh to 3 lakh customers have become affluent on our platform, and a lot of new customers have also come and starting their journey. And these people have a very different kind of needs. They have a wealth management need. They need advisory on their investments. They need AIF, PMS, LAS, and different products. So the lending arm is filling into the portfolio gap and the requirements of this segment, while their wealth offerings like a distribution of other financial products will continue scaling up from today as we start as a part of the acquisition. There will be a part which will the NBFC and the lending products will play, but this will always remain a small part.
Okay, let's talk about your mutual fund space as well, because that's clearly where you started off with as well. In fact, now we are getting to understand from all the data that you also put out, and that every 1 in 3 SIPs actually runs through Groww, and that's a big positive as well. Again, going forward from here, how do you see the growth here? Is it sustainable or not? Since direct mutual funds absolutely earn zero revenue, what's the motivation to keep going on sustaining this practice at this point, or do you think eventually you will have to change that aspect of yours?
Sure. So yeah, mutual fund. See, it is a simple product like books for Amazon and Flipkart. So that's how we started, and we got a good product market fit. People liked it, and then we could drive the expansion of the industry. Almost 60-65% people who are coming in were coming for the first time in capital market itself. So in some way we are able to influence the expansion of mutual fund as an industry, and that too reaching to tier 2, tier 3, making SIP popular. So those things will continue happening because this 1 in 3 is also today, it was used to be probably 1 in 4, 1 in 5 before. So the way it's growing, there is a consolidation that we are seeing is happening in the mutual fund industry also. And from here also, I think there are a lot of initiative at an industry wide, even our regulators, even MFI, a lot of mutual fund companies and the new AMCs also coming in. So everyone is building a lot more depth in the products, a lot more ease of transacting, even making the size smaller, and and also giving variety at a larger size also. Like SIF on the one side is helping people to be able to invest 10 lakh and above in a differentiated products, while there has been effort to make 250 rupees or a lower cost SIP affordable. So both sides initiatives are happening, and we are a gateway for people to invest in it. So it becomes natural participant in the growth that will happen in the next 5-10 years in mutual fund industry. We want to be there. We will continue gaining our market share and making effort to make it simple and easy. From a monetization and business point of view, I think it makes a lot of sense for having customers and the good quality and the right intent customers who are there to invest for long term with us on our platform, because in their life cycle, in their economic needs and their aspirational needs, they always take a lot of products, and then every other product will also have a sort of monetization. So business wise, it's very healthy. It retains them for long. Also, we are seeing when you start a journey, after some time when you accumulate, when your money becomes significant for you in your life, then you would need a lot more services on the top of it, like advisory on it. So although be the plan how the monetary value of this will come, but large part of our focus has always been to make investing easy and simple, and the other things, revenue and monetization obviously follows that.
Sure. But what is your thought on the increasing competition among discount brokers, as far as, of course, you are among those largest shareholders, Zerodha and you obviously together would hold about 40-45% of the broking market right now, but there is increased competition. You also did mention yourself that more and more AMCs are actually coming in at this point in time, when larger players, larger conglomerates, like there is a chance that Reliance Industries could be also getting into a big fashion into this space. How are you looking at the increased competition, and what would that do to your own strategies?
See, first thought that comes is that we are right, in thinking that the industry will go 10x from here. Otherwise, you will see that if a lot of people coming in is a signal that you're thinking right in some way. You're validating that industry is still yet to scale a lot. So there's a significant growth. Financial services, we are in a overlap of a financial services and a tech. The way we build our company, it's a significantly tech company in terms of how we operate, how the financials look like an operating margin and all. But we are solving financial need of customers, so it's in financial services. Now in the two space, there is a significant moat that comes from a tech point of view. We have all our technology built in-house, almost everything, so that gives us a strong way to kind of, it makes us agile. It makes us, very resilient to the changes that are happening, and also gives us a significant competitive advantage in terms of the customer experience. On the financial side also, there is a lot of trust that comes with the leader, leadership, and in general people need to build that trust for some time, and that also gives you an advantage when it comes to how new customer or the new growth in the industry will come and how will they choose their platform. And I think, see, what has worked for us for the last, I would say, 8-9 years is this focus on our customers and how and what they need versus worrying about other players. So we'll continue building that. If we build strong understanding of the new customers that are coming in the platform or in the industry of the country, I think we'll have a good growth coming from them.
Okay. Lastly, if you could help us, Harsh, when you started off this journey from, establishing a startup to now, this is a major milestone that a lot of startup founders have absolutely look forward to. Your journey thus far, how would you describe? And going forward from here, since you're already very bullish on the industry growth, what is the vision you have set for yourself?
Yeah, absolutely. See, being able to list is obviously a happy moment for all the people out here. Everyone has put so much effort for years. But from an operations and a purpose and vision point of view, I think nothing changes. It's another first step for another next phase of, I would say, company. We started with a very simple purpose: can we democratize investing? That's what we've been very consistently building on it across, whatever we have been doing is just around that. And I think we still are not there. We'll continue building on that. So nothing changes. We'll still spend as much time as we can to understand our customers, build a very, very good experience, very transparent, and a very, a reliable experience for them to be able to. We'll continue adding to the selection, as we speak now. Wealth, when we offer wealth of products to the customer, there will be a different, wealth is just not one. There are like multiple products within wealth, which will, each one of them will need a lot of work. So we will continue building this thing. So from an operation business purpose, I think point of view, nothing changes. Of course, it gives us a little more visibility, more trust, and accountability goes to, another. Now we were being accountable to ourselves in a closed room. Now we are happy to share that across, everyone, and then let them. It's good, brings the best out of everyone.
All right. Well, okay. Then, Harsh, thank you so much for speaking to us. All the very best to you for this IPO and for the upcoming listing as well. Of course, we will be catching you soon right after the listing as well to get an understanding of, your broader ideas and more numbers that we can actually talk then. And, of course, we'll be catching you around the quarterlies now.
Thank you so much. Thank you, sir.
Thank you. All right, viewers, I hope that you have got enough and more insight from the management themselves of Groww. In case you've been looking at this IPO as an opportunity for your investment portfolio, you've got an understanding of what their thought process is in terms of the vision that they have in the company and what's the growth path that they are likely to chart going forward from here. Stay tuned with us. Market coverage continues on the other side, and I will be seeing you for the closing edition at 3 p.m. now.